Hi, I'm Ben Reppond. Welcome to my YouTube broadcast. Today is October 9th, 2024. Let's begin with the dashboards. This past week was mixed, a little bit negative, a little bit positive. And in the yellow box, I put the results from last week based on the indexes. The four U.S. markets, the Dow, the S&P, NASDAQ 100, and the Russell 2000 small cap index. And then the two foreign ETFs, developed markets and underdeveloped markets, EFA and EEM. And then finally at the bottom, I put the long-term government bond, TLT. So you can see, excluding the bond at the very bottom, the bond index, the top 6 are all equity indexes, including foreign markets and U.S. market. All of them are positive, measured by the green dots on the right side. Are they above their 20, 50, 100, and 200-day moving averages? All of them are, all green. And we don't see that often. So, and I think it's been the second or third week that we've had that. And then, of course, the bonds were negative, dropped below their 20 and 50-day. You can see that. When you look at the yellow box, kind of in the center of the page, you can see that there were, again, it's mixed. There were some that were negative and some that were positive. But, again, generally driving up the top two, the S&P 500 and the NASDAQ 100. But at the bottom, the treasuries, they had a bad week, went down 3%, the 20-year long-term treasury, and bringing it to a negative 3.37% for the year. So, again, putting a drag on traditional portfolios. The S&P 500 breaks down into its 11 component parts, its 11 sectors. And again, when you look at the yellow box last week, you can see it's a mixed bag. Some of the sectors were positive. Let's see, what do we have? 5 of them positive and 6 of them negative. So, but when you look to the right of that, for the year to date, pink box, you can see that, financials, industrials, technology, consumer staples, etc., those are all positive, going down, from 21% all the way down to 6%. Over on the far right side, you see the green dots, red dots above their moving averages or below, and there were 4 that were below their moving averages, 4 dots, and then 40 that were above. So generally, again, a positive week and a positive year to date. Okay, the S&P 500, this is a line chart. It's a weekly chart showing 1 move equals 1 week, and it has stayed above for, about a year now, stayed above its 20-period moving average, looking at it on a weekly chart. So it's come down. It's come down. You can see this to the right side of the chart. It's come down 3 times and touched the 20-period moving average and bounced right back up. So that's basically a sign of strength. And for the last 3 weeks or so, maybe the last month, you can see that it's been moving in an upward direction at the far right of the chart. When I put it on a candlestick chart, you can see the same thing. As you look at the hollow candlesticks, there's a lot more of them than there are red candlesticks. So that shows that there's periods where the market is moving up and not as many periods as it's moving down, and including the last 3 weeks where it's definitely been moving up. So this is a relative strength chart showing the relative strength of the NASDAQ 100 to the S&P 500. When it goes up, it favors the NASDAQ. When it goes down, it favors the S&P. I put a black arrow at the end of it so you can see for the last 3 months or so, it has been moving in a downward direction, which has favored the S&P 500 as being stronger than the NASDAQ 100. But over that longer period of time, you'd say the NASDAQ 100 still has had more strength. I think the short-term view of the weakness of the NASDAQ compared to the Dow, or excuse me, compared to the S&P is kind of the thing that mostly caught my eye. Okay, kind of the same thing, because the NASDAQ 100 is heavy growth stocks. And so when you look at break it apart to the growth stocks versus value stocks, you can see that the growth stocks have generally gone up. But again, I put the black arrow to show that the value stocks in the past 3 months or so have dominated the growth stocks, showing that they're going up. The value stocks are going up as much as the growth stocks are going down relative to each other. Next, I do the broad market, the S&P 500, compared to the small cap market, which is the Russell 2000, and the ticker symbol is IWM. So when you see here, I took the other approach. I put an arrow because it's showing, in my opinion, more strength moving in the upward direction than in the short term moving in the downward direction. Here we are back to the TLT, the long-term government bond, the 20-year government bond. And I put a black arrow showing that in the past year, it has moved up. But look at the very end of it, the past few weeks, look at the direction. It has been pulling back. I still think the upward direction in the last year is valid, but it has not yet broken through that moving average. So I'd say it still probably has some strength to it. The dollar broke through its moving average, went down some, 20-period moving average. This is a 3.5-year chart. And you can see this last week, the dollar rallied. So at the very end, it goes up sharply and is pushed through the 20-period moving average. So I don't know what that means going forward, if it's going to show more strength. I suspect it will, but I don't know that for sure. But again, when you look at that long-term 3.5-year period, it's showing strength. The gold, measured by the ETF GLD, has continued to go up. This past week, you can't hardly see it, but it pulled back just a tiny bit at the very end. But it's been holding that the gains that it has been making. And so again, I think that's one of the strongest assets out there is gold. Silver, even more so. So when you see that, look at the very end of the chart, silver goes up and then it continues to go up sharply and is now, the spot price is around $29, meaning that the retail price is in the 30s. So, but that's the difference between gold and silver. When it goes down, gold has held some of its strength going up, and now silver, compared to silver, and then now silver is kind of rocketing up. So they sometimes change places like that. The Bitcoin has been in an upward trajectory and has now pushed back up through its 20-period moving average, and the long-term direction is positive. What's interesting, there was a lot of there were positive things about the S&P 500. It was moving up generally, but there were components that were moving down. So there was risk in the market. It was mixed between, positive and negative. What was interesting is that the volatility index moved up. So that's an indication of increased risk. So you can see at the very end of the chart the degree to which it moved up. So I put my arrow short term to show the general direction of volatility, which is up. I also put in my black mark on 24 to show where the threshold is that I believe where volatility starts to become more dangerous. We're not there yet, but you can see how far it is away. I think for the third week in a row, Asbury Research has gotten 5 out of 6 of their indicators to be positive. 1 is negative, and they've changed places a little bit, but it's still 5 out of 6. The cross-asset relative performance on the Asbury Research shows that stocks are stronger than bonds in all 3 time periods: the last quarter, the last month, last week, the last quarter, the last month. Same with high beta stocks, high volatility stocks, be like growth stocks, stronger for the last week, month, and quarter. And the emerging markets and developed markets are stronger than the U.S. market in all 3 categories: week, month, and quarter. U.S. versus the world. Now, when you look at this, if it's green, this shows that it has more strength than the U.S. Look at the amount of green boxes here compared to the U.S. And so the ones that are out, this is the market, not their dollar and not their economy, not their dollar, I mean their currency. And the ones that are stronger are Chile, Peru, Italy, Germany, Spain, France, the entire Eurozone, Malaysia, Hong Kong, Taiwan, India, China, Thailand, Australia, and the emerging market segment. The ones that the U.S. is stronger is Mexico, Japan, and that's it. Mexico and Japan, we're stronger than them. So we got a lot of markets around the world that are actually outperforming the U.S. I'm using South Korea for a while because the clarity of the chart, it's going in an upward direction to the far right. And you can see the last week or two, couple of weeks, where it has moved up. And this shows that the U.S. is stronger than South Korea over this period of time, and this is a 2-year chart. Okay, let's take a look at gold and silver. So I told you when I showed you the chart for GLD for gold that there was a little bit of a tick down, and that's what this is. And you can see the spot price of gold is $26.54, which is down 0.2% from the previous week. And silver is up to $32.19. So that is pretty high. It's definitely been coming up 1.8%. Gold-silver ratio has dropped down to 82 to 1. Gold is a numerator, but because of the height of it, it emphasizes silver is considered generally a better buy at these prices. A monster box of silver, 500 rounds of generic silver, is going for $16,730. That includes a $1.27 markup on top of the spot price, which I just told you. That brings it to $33.46 per round. And that's courtesy of my son, Preston. The bulls are talking to the bear, very concerned about you. You need help. Well, the bulls are in charge. They have been in charge for a while, and really since 2022, almost 2 years now. And I don't know how long it's going to last. I don't want to say anything negative about it. It looks like it's positive for now. But as I take the intermediate term view, I'd say be careful, because at some point the markets will reverse, and really then at some point they will collapse. I don't see anything now fundamentally that says that they're going to collapse, either technically or fundamentally. But I'm cautious, so I just say be careful. So thank you for watching. If you have questions or comments, leave them in the comment section below.